All right, and hello and welcome back, guys. My name is Saurabh Mutha. If I know you guys, then welcome back and good to see you guys back. If I've met you for the first time, then hello, everyone. Good afternoon and good to see you all. Guys, we're looking at the CA Inter fast track course for direct access. And while we talk here, my plan is to do in depth DT for your November 22 exam. So if the audio is good, if the video is good, and if you are good, we are going to begin. But first up, guys, a couple of things that you should keep in mind. If you have anything or a community that is being built, I've linked the fast track Telegram group link here. I've also pinned it so you can join it whenever you want. Also during the lecture, and I will also send you the Google Drive link for the quick book, which is my book to revise everything there is in tax. Also the module highlighted versions, also anything that you need like a question bank, etc. Everything will be on the Google Drive link, which I will send you across very soon. So how's the Josh, guys? I hope everyone's doing well. I hope you guys are not too stressed, honestly, because this is that time when the tension starts building up. Chirag, hi, sir. I hope that hi is in a very good context. Anyway, so August is a month that tries to build a little, tension in the minds of students. I hope that's not happening because, guys, you can't do anything when you're tense or when you're stressed. So you got to have a clear mind. Yeah, just clear the sky, guys, and aim. You got to know, and just you got to get about 40 or 50 marks plus. Just remind yourself, this is not your 10th or 12th standard where you have to score like 95 and 99 and 101. You just got to make sure you're above the 50, 40, 60 marks, and you'll be good to go. All right. And with that intention, guys, I am looking to start DT. We've had a very good run on finishing GST. And on that note, just telling you what all we'll be doing in direct access. Here we go, just on the screen. Perfect. Nice. So as you know, direct taxes are for 60 marks. So please remember, if you're trying to spend a lot of time on DT and you're going to forget GST, that shouldn't happen. GST first always. Guys, it's like a meal. What do you start your meal with? Soups and starters. Yes. So GST is that soups and starters. And this is like a main course. It's bigger. But honestly, you will get full your marks in GST as well. So don't worry too much about one chapter or two chapters that you don't understand in DT. Of course, DD is slightly voluminous. We have about 14 chapters. Of course, some chapters are really small, some chapters are non-relevant, some chapters are really important. So we have about 14 chapters and we have about 7 days. So roughly about half a day per chapter. That's what we'll be looking at. What all we will be covering? First, for every chapter, we'll be looking at the concepts. So I'll discuss the concepts with you here. Then we'll be looking at the ICI material. So we'll be looking at the ICI highlighted notes. Plus, we'll be looking at my quick book. The quick book is going to be helpful for revision, and then we'll be looking at sums. Just like we did in GST, once we finish our entire portion, then we will also solve some sums and we'll try to get a good hang of the entire thing, that is DT. Guys, I also have handwritten notes in case any of y'all are looking for handwritten notes. I also have handwritten notes. If you want, I could also upload them on the Google Drive, which is basically very easy and good to revise. If you already been my student in my classes, I make you write notes. So anyways, you would have had those handwritten notes. So that's what it is. Anything else that you want me to do, guys? We could definitely do all of that. Yes. And so with the scissors in one hand, and guys, and aiming for completing this really well, let's cut the ribbon and let's inaugurate DT. All right. So while we inaugurate DT, I'm just going to tell you how DT works. What is the story around DT? So let's talk a little about what is DT, guys. Direct taxes, or DT, which is actually for you income tax, is basically a tax on your income. India is a very big country. To run a big country like India, the government needs a lot of money, and that's the reason, besides GST, which is on consumption, income tax is on people who earn income. In India, it's very often remarked that not too many people pay income tax. This is because not too many people have higher incomes. So hence income tax is paid directly by those people who earn income. Is this progressive? Yes, this is progressive because the more you progress in life, the more you will pay income tax. Guys, when I started studying, when I was doing my articleship, I was not getting paid well enough to pay income tax, but my aim was to pay income tax. And when I became a CA, my aim was to pay surcharge. If you know already what is surcharge, that should be also a goal, because of course you can't avoid taxes. So the next good way is to embrace them and to love them and to aim for paying higher taxes. So that is what progressive means. The higher you go, the more taxes you'll end up paying in income tax. Now, it all starts with your legal status. Everything in the Income Tax Act starts with the legal status. So, can you be an individual, guys? Like you, me, can we all be individuals? Yes. A couple of individuals of the same family, can they be an HUF Hindu undivided family? Yes. Can a couple of individuals together come together and can they start a proprietorship firm or an LLP? Yes. Can a lot of people become shareholders and can they start a company, whether it's private, public, not for profit, etc.? Can you, some of us, make an association of persons or a body of individual? Let me 2 minutes discuss this, although they never ask in the exam the difference between AOP, BOI, but in the mind you should know what is AOI, what is BOI, what is AOP. Guys, AOP is, let's say, me and two other friends of mine and an event management company. We decided to host a Diwali party for commercial. For we sold tickets, we made a lot of money. So these are three individuals and one event management company. We came together, but we did not make a partnership deal. Otherwise, we would be called a partnership firm. So are these very similar? Yes, they are very similar. Only in a way that partnership firm, there is a partnership deed, there are partners. Here, there are only people who are associated. Also, this is planned. Sometimes it can be unplanned. Example, there are 3 4 brothers who inherit a business. So if they are not a partnership firm, they can be a body of individual. Basically, body of individual is something that you don't plan, it happens automatically. वापस आ जाना. All right. So this is what it is. And guys, there are trusts like Tirumala Trust in Mumbai, Siddhivinayak Temple. They all are trusts and they are not actually persons. So they are called artificial jurisdictional persons. Can there be a question, define persons, for 4 marks? Never and never again, guys. So don't worry about these things, guys. This is your foundation on which you start learning. So this is the first step. The first step is to determine the legal status. Guys, in your exam, most of the questions will be around individual and HUF. At final level, they only focus on companies, so the focus shifts to companies at the final level, but at the CA inter level, it's all going to be individuals and HUF. So guys, please tell me, can there be a Mr. A is an individual in the exam? Will they already tell you the legal status? Or a family has a HUF, Rajiv and Sons HUF, yes. So will you have to ever find out legal status? No, you will never have to find out legal status, guys. So is there a chapter on legal status? No, there is no chapter on legal status. Once you know your legal status, and let's say you're an individual and by profession you're a surgeon, because he's the hero of my story. So let's say you're an individual and you're a surgeon, then they will ask you a very important question that, listen individual, listen HUF, listen company, what is your residential status? But how does it matter? Guys, does it matter if you're white or black or you're brown? Does it matter if your hair color is golden or blonde or red or black? Does it matter if your nose is like mine, like a mushroom, or is it long? Does it matter if you have great looks? No, but what matters is residential status. Guys, it really matters. The residential status is absolutely important, because residential status tells you what all incomes will be taxed. So, guys, can we have a black person? Can we have a white person? And we Indians, we are called browns. So can we be browns? Same way, guys, in residential status also. There is at one end a person who's called a non-resident. This guy is very, very happy. He's at one end of the spectrum. He is very happy. Why is he very happy? We'll see soon, but he all smiles. He's very smiley and happy. At the other end, there is a resident, an ordinary resident. This guy is a little unhappy. We'll see very soon why. And somewhere in the middle is a resident, but not ordinary resident. So there are 3 types. Yes, there are 3 types of people: resident, but not ordinary resident. All right. Guys, in this case, can you be a third or a fourth person besides this? Can you be a fourth person? No, guys. Only maximum 3 people. In the exam, guys, can they give you Mr. A is a resident in India? Yes. But sometimes, guys, can they give you that there is no residential status and you have to find out the residential status? Yes. So is there a chapter on this? Yes, there is a chapter on this. residential status is a chapter. Now guys, once you know who you are, whether you're a non-resident, whether you're RNOR, whether you're ROR, depends whatever you are, on the basis of that, your income will be taxed. Basically, that is called scope of income. Scope of income is basically going fishing. And scope of income means how many fish do you catch in your net, that is called scope of income. How many incomes are taxed under your hand is called scope of income. A scope of income, for a non-resident, there's a shortcut. There are only 4 incomes which are taxed in the hands of the non-resident, and the shortcut that is dear income. Only 4 incomes, guys. If someone told you today, guys, that only 4 incomes will be taxable, will you be happy? Please tell me that. If in India, where we pay a lot of taxes, if someone told me that only 4 incomes will be taxable, will you be happy about that? Yes, guys. Personally, everyone would be very happy. So that's the reason this guy is very happy. The reason for his happiness was this dear income. And what if someone told you that all your incomes will be taxable? That means in Mumbai, yes. In Bangalore, yes. In Goa, yes. In Bangladesh, in Argentina, yes. Anywhere you earn, we will come and we will tax you in India. This is all global income, guys. This is why he is not very happy. Because please tell me, when you earn income in UK, you have a house in UK, you've rented it in UK, the person who's staying also is from UK only. Guys, do you want to pay tax in India? No, but the Indian government says that listen, we will tax you because you're a ROR. And this guy here, he's also smiling because, guys, for him also, only these 4 incomes plus one more income is taxable. So this is a shortcut. I'll tell you what this shortcut means very soon. I'm just introducing the portion to you guys. So this is called scope of income, and guys, scope of income comes only after you determine the residential status. So in the exam, if they don't give you any of these, which one will you find out first? Please tell me in the chat box, guys, which one will you find out first? You will find out the residential status, guys. This is first and this one will be second, always. So how do you remember this? R and S, guys, alphabetically also R comes first. So there is R and then you'll find out scope of income. All right, guys, in Mumbai, we have very small houses. In other cities, you have bigger houses. So this direct tax, we have basically 5 rooms in the house. So I'm going to the next slide. So these 3 steps are done. And for the next step, I'm page turnover, PTO, something that we used to write in school. So page turnover. All right. Guys, here there are 5 rooms. Please tell me, in your house, does your kitchen have a different purpose? Yes. And when do you enter the kitchen, guys? Whenever you're hungry or whenever you want to cook something, you enter the kitchen. Does your living room have a different purpose? Does your balcony have a different purpose? Does your bedroom have a different purpose? Does your bathroom have a different purpose? Same way, guys. There are 5 rooms in direct taxes. And each of the room has their own purposes and each of them has to be looked separately. So here we go. The first room is called income from salaries, or we will call it salaries only. This is for those people in India who work, and when you work, you get some salary which is taken here, which is taxable here. Next, can you make some money from a house property, guys? Can I give my house on rent? Yes. So that is house property. Can I have a business and profession, that is profits and gains from business and profession? Yes. Can I buy and sell assets like gold, etc.? Yes, that's my capital gain. And can I earn some dividend income, interest income, betting income, etc.? That is income from other sources. So these are 5 heads of income. Guys, please tell me, give and take relationship is also something that you use in tax. Please tell me, in salaries, are you offering something to the government to tax you? Are you offering something? Yes. And if you're offering something, then will they give you a deduction? Yes, they will give you deduction. So basically, in each of these heads, guys, there's a give and take relationship. You give them income, they will give you deduction. Guys, if you don't have salaries, let's say I'm not thankfully in a job. I hated jobs in India, guys. So I decided to do something on my own. So I don't like jobs and I don't have a salary. If I don't give them anything under this head, can I take deductions under salaries? No, I can't take. That is because of give and take relationship. So each of these heads, do we give something? Yes. Do we get something? Yes. So in each, we will have to find out the net income. Guys, your first sum for 14 marks will have something of salaries, something of house property, something of PGBP. It's basically a mixture where everything is there together that 14 marks are. Guys, these are 5 heads of income. Please tell me as a student right now, which is the next soonest income that you will get once you become a CA, guys? Which is that head where you'll start earning income? You will start earning income in the head of salaries. And if you decide to start your own profession or a CA firm, in which head of income will you be taxed? PGBP. In a few years later, when you buy a house and you rent it out, you will be taxed under house property. Of course, you will open your demat account. Some of you all already might be looking at opening your demat account. And when you buy and sell shares, that will go in capital gain. And on that Sunday, when you feel lucky and you go and bet on horses and maybe you win, you will be taxed under IFHP. All right. Guys, do you want to pay a lot of taxes in India? Do Indians want to pay a lot of taxes? No, for various reasons, guys, we don't like to pay a lot of taxes. So, guys, I can take my income and I can give it to someone else. Example, let's say I have X amount of income, but I don't want to pay tax on that. Can I take some of the money and give it to my mom? Or can I ask Unacademy to pay me money, but in my spouse's name, or in my father's name, or in my child's name? Yes. So basically, you try to give your income to someone else. But this is like a dog, guys. Think of it like a dog. Please tell me, if you have a dog, you like to play with it. You like to enjoy the company of the dog, but because he likes to go for walks too often, you go and give it to your friend. But please tell me, will the dog come back to you? Because he's your dog. Same way, guys, even if the income you try and pass it to some other people, will that income come back to you? Yes, that income will come back to you. And when it comes back to you, it is called clubbing of income. The government is very smart. They say that whoever's dog is it, it will go back to that person only. So this is called clubbing of income. Guys, next, please tell me, when you have profits, does the government like you? Does the government tax you? Yes, same way, guys. In bad times, when you have losses, the government says, listen, I don't want to tax your losses. In fact, if you have profits of 100 and if you have a loss of 20, they say you can set it off. So ultimately, you will be paying tax only on 80, and this is called a chapter called set off and carry forward of losses. Guys, set off basically means you minus it in the same year. Carry forward basically means if you don't have any profits, then what do you do with this 20? You carry it for the next day. It's almost like, guys, cooking something extra. If you cook something extra and you can't consume the same day, guys, can you carry it forward in the fridge to the next day? Yes. And guys, can you eat it after next day, next to next day? But can you eat it after like 1 year? Maybe not, guys. So you can carry it forward, but for a certain period of time. That is called set off and carry forward. And guys, finally, after doing all of this, will you get a very useless number called gross total income? Why do I call it useless? I'll tell you very soon, but this is a very useless number. This is called gross total income. Guys, ideally on this, you should be paying taxes. But the government says, listen, I know ideally you should be paying tax on this, but the government says, I can't do a lot of things for you. Guys, please tell me, when you fall sick, who pays your medical bills? When you retire, who gives you pension? When anything happens to you, you have to take care of yourself. So hence the government says, listen, because I cannot do anything much for you, what at least I will do is, if you pay for medical premium, if you pay for life insurance premium, I will give you deductions from your GTI. But for that, you should have GTI. So if your GTI is 10 lakhs, can I give you deductions of 1 lakh? Yes. Can I give you deductions of 5 lakh? Yes. Can I give you deductions of 10 lakh? Yes. But can I give you deductions of 11 lakh? No, sorry, no. It cannot be more than this 10 lakhs. So they will give you deductions. And finally, after deductions, guys, what you will get is the hero of the story, which is total income. Guys, this is your aim in the exam. There will be at least 2 sums where they will say compute total income. At least 2 sums. This exam There were at least three sums on total income. So every time they keep putting a lot of sums on total income. In total income, guys, this is the hero because on this you'll have to calculate tax. Guys, please tell me, uh, in food, can you have soups and starters? Can you have main course and can you have dessert? Same way, guys. In tax also, you have something called basic tax. Next, something called surcharge, and next something called HEC, which basically makes up your total tax. But how do you pay this total tax? How do you pay this total tax? Guys, in McDonald's, do you pay before you eat the food? That's called advance tax. In some restaurants, fancy restaurants, do you pay later after you finish the entire meal? Yes, that's called self-assessment tax. And in the some restaurants, like in Mumbai, there are very busy restaurants where while you're eating, he knows you finished, so he'll give you the bill and he'll throw it on your table. So this is called TDS and TCS. So guys, am I paying something else? No, you're paying the same tax, you're paying the same money, but in different ways. Guys, can you pay your bill through debit card? Can your friend pay through credit card? Can someone pay through Paytm Karo? Yes. So these methods of tax are not different taxes, guys. It's the same tax you're paying, but through different mechanisms. And last, guys, who knows what has happened with you guys throughout the year? You know, your CA knows, the government doesn't know. So you have to tell the government the story by filing a return of income. So here is your entire portion. Now let's see, guys, we have to score 60 marks or there will be 60 marks from this. Let's try and see where all the marks come from and how predictable your paper can get. First up, so I'm putting it here, out of 60 marks, guys, out of 60 marks, 18 marks are anyways MCQ. Guys, I hope you're aware 30% are MCQs. If you've given your exam already, you know that. How do you prepare for MCQs? There is an ICA MCQ booklet whose video is already on YouTube. You can watch it. Otherwise, guys, if your basics are strong, your MCQs are going to be good. If your basics are weak, your MCQs are not going to be good. So 18 marks of MCQs and that leaves us with 42 marks. So let's try and predict, guys, what will come in this exam in November 22. This is my prediction list. Let's predict what will come and then, guys, we will, after the exam, I'll tell you guys what all came from this prediction list. All right. It's not difficult to predict, guys. There will be a question number 2. In that question number 2, there will be a TDS sum or a TCS sum of at least 6 marks. So your 42 marks, 6 marks are done here. Next, guys, there will be a one house property sum, at least there will be one house property sum of 4 marks. So that is your 10 marks scored here. Return of income, when do you file it? Can you file it late? What happens when you file it late? Something around that will again come for 4 marks. That's theoretical. So that is 14 marks scored here out of 42. Next, there is a chapter called set off. Guys, only it happened only in 1 or 2 papers that they have not asked a set off question. Otherwise, guys, every year for about 5 marks, sometimes even more, they ask a set of question. So this is basically about 19-20 marks. Plus, guys, every year, not as a direct question, but indirectly, they ask you on deduction. And again, about 3 marks to 4 marks is on deduction indirectly. So this is about 24 marks of your 42. Now, there will be definitely one sum, I'm just putting it here, there will be one sum of at least about 4 marks which will be on residential status, and there will be about 6 marks directly or indirectly on PGBP. So what about this chapter called salaries? Can I avoid it? Yes, you can completely avoid it, except a little portion of salaries that you should know. If case a small question comes on salaries, you can completely avoid it. Anything new we can do, but salaries is something that you can completely ignore. What about capital gain? Details about capital gain. See, capital gain basics are important, but otherwise, guys, capital gain, I'll teach you a small method to find out the capital gain. But beyond that, guys, not too much is often asked at capital gain. It is important, I'm not saying it's not important, but something, only half part of it is important, half is completely not asked ever. All right, and then guys, there is a chapter called tax, rates of tax, how much tax do you pay, but that will be important only if you get the total income right. So hence your idea should get with the total income right, and then on that total income you have to calculate tax. So about 20 marks here, 29, about 33 marks are on the screen guys. This is how predictable your paper is. This is not at all difficult, especially after you're coming from the world of GST, because GST you already scored your marks. At least out of 40 marks, you should have scored about 25, 30 marks there, and anything that you score here will be a bonus. So that should be your exam strategy also. Focus on GST first and then move to this chapter or this part. All right. And with that, guys, we are looking at starting the first chapter called Introduction. Guys, beyond all of this, guys, there is something which has not come in any of these discussions, whether it's legal status, residential status, scope, whether these are the 5 rooms, whether it's clubbing set off. Guys, there is one guy who's looking from outside the door through the glass. He waves at you and he goes out. And that person is exempt income. Exempt income is that one friend, guys, when you're sitting in class and he's bunked the class, he's standing outside the class, he's looking at you and he's waving out that, listen, I'm not coming to the class, I'm not coming to the class. That guy is exempt income. So exempt income never enters this room. No, never. Can you earn exempt income like agriculture income? Yes, but will you add it to your total income calculations? Not at all. It'll just be outside, it'll wave and it'll leave. Can you be asked a question on that also? Yes, there could be a question on that. Not directly, generally a part of the bigger question they can be asking you. So today's agenda, or the first session's agenda, is just that we have to first look at introduction. Introduction, a major part, is already over, but we'll look at some more points. Introduction chapter, guys, no question is generally asked on this chapter, but it's a warm-up chapter. As you know, guys, this is almost like a gym class for your mind, and we need to warm up before we start running. So the first DT question, or the first introduction question, is what is the difference between DT versus IDT? How many marks will you get for this question in the exam? 0, because this is not important. Is this lecture applicable for May 23? This lecture is applicable for November 22. Unfortunately, Neha, we will have another session for May 23 as the time comes. All right. So this is DT versus IDT. This is a question which is not important. Can you tell me, guys, when you were born? I would want to know actually, when were you guys born? What is your birth year? Yes, all right. 2000, 2002, 2003. Any 90s kids here? 94, Arjun. Good job. Yes, me too, 90s kids. All right. Perfect. So here we go. Guys, the Income Tax Act was started much before that. So the Income Tax Act is basically in the year 1961. And of course, there are income tax rules also. The rules they forgot in 1961, so they added the rules in 1962. Guys, please tell me, the income taxes go to BJP government, they go to Congress. Whom do they go to? They don't go to any of these, they go to the central government. So the central government takes the income taxes. For basically collecting this income taxes, they have a central board of direct taxes and a Department of Revenue. Department of Revenue is that dream job, guys, because everyone comes and puts their money with Department of Revenue. Basically, all of us, when we pay tax, it goes to the Department of Revenue through CBDT, Central Board of Direct Taxes, and it is collected by the central government. Guys, are these questions important from the exam perspective? Not at all. Please tell me, what can be income? Guys, if an actor does one movie every year, is that income from PGBP? Yes. But what if there's an actor like Amir Khan who's doing one movie in 4 years? Is that also business and profession? Yes, guys. So income is income, doesn't matter the frequency. Guys, frequency will not determine what your income is. Next. Guys, if I teach and if I give CA services, is that income? Yes. And if you sell food, is that income? Yes. If you sell illegally on a food joint, is that also income? Yes, guys. Legal or illegal, all incomes are incomes. But of course, illegal incomes, if they catch you, they're going to put you behind bars as well. All right. So frequency, illegal income is also income. Next, guys, income is different from capital receipt. Income is different from capital receipt. Let me explain you what is capital receipt. Guys, when you take a loan of 1 crore rupees, is that your income? No, that is not your income. That is a loan. That is a capital receipt. So this is the difference between income and capital receipt. Capital receipt is example a loan, which is not your income. Next. Guys, when I get paid by my clients, by all these classes, etc., and guys, if I donate that money or I give it to someone or I give it to a cousin of mine who needs money, guys, can I tell the government don't tax because I've done used it for good purposes? No, they say that is application of income. Application of income does not matter where you apply the income. We don't care whether you watch a movie, whether you buy a car, whether you help your cousin, doesn't matter. Application of income, is it taxed? Yes, it is taxed. But before the income reaches me only, guys, another example for capital receipt is equity share capital. Alright. Guys, but before the income reaches me only, if I divert the income, that means I don't want it, give it to someone else, then is diversion of income taxable in my hands? No, diversion of income is not taxable, at least in my hands, because I have diverted it before only. So this is not taxable. Alright. So there are different kinds of income. This is application of income. This is diversion of income. Next, I'm just checking what else is there. We know the different people. So we know individuals, HUF, firm, LLP, etc. Guys, is there any difference between firm and LLP, guys? Is there a difference between firm and LLP? Yes. You know the difference already, guys. We've highlighted this in accounting many times, but I don't want to get into the difference because for income tax purposes, firm and LLP are just the same. So if you're looking at from tax perspective, when I say partnership firm, am I also referring it to LLP? Yes, and taxability is the same for both of them. Guys, please tell me, are your parents interested in you? Yes. Are you interested in CA degree? Yes. Same way, guys, in tax also there are two kinds of interest. One is called beneficial interest and one is called substantial interest. Guys, beneficial interest is you interested in your BCom degree. Guys, are you interested a lot in your BCom degree? No, only 10%. So if I have any interest in a company, like I have equity share capital, etc. for company which is 10% or more, then can I say I'm a beneficial interest holder? Yes. But what about a partnership firm? Then profit sharing ratio. So 10% or more, if guys, is Mukesh Ambani a beneficial interest holder in Reliance? Yes. Is a PwC partner who has 11% share in the profits of the company of the firm, is he a beneficial interest holder? Yes. So beneficial interest is 10% or more, and substantial interest, guys, this is you interested in your CA degree, at least I'm hoping 20% or more is substantial interest. If you ever forget, how do you remember? Guys, B comes before S, so 10 and then it increases to 20. That's how you remember it, beneficial interest holder and substantial interest holder. Guys, please tell me, before you started CA, what was New Year for you? This is the funniest thing, guys. Before you started doing CA, when someone said New Year, what would you say? What is New Year? You would say 1st of Jan is New Year, because obviously we party all night and 1st of Jan is our New Year. But once you take up CA, guys, please tell me, if someone tells you what is the New Year, the New Year becomes 1st of April. That's a joke on our life, guys. It's 1st of April and that's when a financial year starts. So financial year starts on 1st of April, ends on 31st March. That is financial year. The year you earn income is called the previous year, guys. The year you earn income is called the previous year, and on that income, whenever you are assessed, is called the assessment year. So basically, for your exam, please tell me, guys, what is the previous year? For your exam, the previous year is 21-22. Everyone, what do I mean by for your exam? Guys, most of your exam sums in DT, will they have a previous year? And what will be the previous year? 21-22. And what will be the assessment year for that previous year? The assessment year is the next year, that is 22-23. So if they ask you this or if they ask you this, you know it is your year question. And guys, just for knowledge, a lot of people think, oh, tax keeps changing all the time. When you give your exam in November, Nirmala Sitharaman in October will come out and say some change. Guys, will it impact you? No, because for any exam that happens in 2022, the Finance Act that is applicable is 2021. What is the Finance Act? The Income Tax Act is very old, guys, so we need to keep changing it. We change it through an amendment called the Finance Act, which is also popularly called the budget. So please tell me, for your exam in 2022, which amendment will apply, guys? Finance Act 21. For some reason, guys, I'm not even saying that you will not clear, but for some other reason, let's say you have to give May exam in 23, then which will be the Finance Act which will applicable to you? Finance Act 22, 1 year before. So all you need to do is check the amendments of Finance Act 22 and you are good to go. In GST, we have very frequent changes, but in DT, we generally change the law only as per the Finance Act. All right. That's about it. That's about it. And guys, please tell me, do you understand the concept of rounding off? Yes. So we will also understand some concept of rounding off, but we will see that ahead. This is a first chapter introduction. How many marks will you get from this, guys? You will get an omelette. 0, guys, nothing on this, because this is only a warm-up chapter. So this is 0 on 5. But it still helps us to set the stage up. I get to know your pace, you get to know my pace. I get to know your replies, you get to know my replies. For November attempts, amendments till April are applicable. Absolutely right, Nandish. But what happens is, in finance, in direct taxes, there are not too many amendments which happen. Most of the amendments in the Income Tax Act are through the Finance Act. Whereas in GST, they are frequently because the GST Council meets, etc. And as for GST, it's more important that April deadline. Alright, perfect. So guys, this is the first chapter. I'm hoping that you have no question from this first chapter, because this first chapter is absolutely just a warm-up chapter. Guys, do you have that one friend of yours who's always been with you when you were in school also, now when you were in college also? Yes. Same way, guys, in tax also, we have that one friend who's always going to be with us, and that friend is called rates of tax. So rates of tax is not something that we will do on a 1 day basis. No, every day we'll be doing a little rate of rates of tax, so that by the end we are very comfortable with rates of tax. Before we start rates of tax chapter, guys, please tell me, tax is always calculated on which income? Is it calculated on gross total income, or is it calculated on total income? It is always and always calculated on the total income, and that's why I feel GTI is so useless, guys. GTI has no purpose. It's like your BCom degree. I'm so sorry, but yes, it is like your BCom degree, guys. GTI has no purpose. What is the main purpose of total income? Rates of tax are calculated on that total income. All right. Guys, let's start. Rates of tax differ for different people. So I'm talking about rates of tax for individual only first, only and only individuals. Guys, do you think individuals vote, especially resident individuals? Do you vote? If you're 18 and plus, do you vote? Yes. So individuals vote. Guys, does the government have to keep these guys happy? Especially the resident individuals. Yes, the government has to keep them happy. So the government made a rule that if you are a resident individual, if you are a resident, and resident may be ROR or RNOR, doesn't matter. If you are a resident individual, then up to 2,50,000 rupees, you don't have to pay tax. Up to 2,50,000 of GTI or TI? No, everything is TI. Up to 2,50,000, you don't have to pay any tax. So this is technically called minimum amount not subject to tax or not liable to tax, which we call it as basic exemption limit. So what is your basic exemption limit, guys? Basic exemption limit is up to 2,50,000. And up to 2,50,000, this is called basic exemption limit. What is the rate of tax on this, guys? The rate of tax is 0%. Is this the first slab? Yes. So in India, guys, why do lots of people not file their returns? Because their total income is up to this amount, so they don't have to file their return, or they don't have to pay their taxes. Then, guys, do you climb steps? Yes. So this is the first step. Next step, guys. If your income is more than 2.5 lakhs, but it's up to 5 lakhs, please tell me, guys, are you getting richer in life? Yes. And guys, is direct tax progressive? Yes. So the government says, listen, I will charge 5% on this gap. So up to 2.5 lakh, nothing. Up from 2.5 to 5 lakh is 5%. Okay, now let's get richer, guys. If you're earning more than 5 lakhs to 10 lakh rupees, guys, this is what most CAs start off with. But if you get a rank, you suddenly start getting 3 times more money. So aim for a rank, guys. I know it is difficult, but it is something that some people do it. Why not you? So here, guys, is this a next step? Yes, this is the next slab. And here, unfortunately, the jump is very high. It is 20%. Please tell me, guys, if a 5 rupee idli becomes 20 rupees, will it suddenly become a big jump? Yes, so this, guys, this is applicable for your year. People feel that these are old rates of taxes. No, guys, these are option A and option B. Please tell me, when you go to a restaurant, can you sit in the AC section and can you sit in the non-AC section also? Same way, guys, can you follow this scheme and can you follow the new scheme? Any of them? Yes. So anyone who tells you that, listen, this is old rate, this is not applicable, you please tell them to get out and you please listen to me. Because there's a lot of myth that this is old, this is not applicable. No, guys, this is applicable. In fact, most people today also follow this. I follow this scheme. All right. And next, guys, what if you start earning more than 10 lakh rupees? Guys, then what is the slab, guys? The next slab is 30%. So is this progressive? Yes. But guys, please tell me, is this an even jump from 0 to 5, 5 to 20? This is not even, guys. This is like a step and then you have to jump 3 steps. So this is not so good. This is problematic, but we'll see what the problem is later. So let's calculate, guys. What if I'm making 6 lakh and 40,000 rupees? That's my total income, 6 lakh 40,000 rupees. So let's check, guys, on the first 2.5 lakhs. How much tax, guys? Zero. From 2.5 to 5 lakh, what is the gap? I want the gap. I don't want the tax. I want the gap. What is the gap? 2.5 lakhs into 5%, that is 12,500. And from 5 lakh to 6 lakh 40, please tell me the gap. I don't want the tax, I want the gap. What is the gap? The gap is 1 lakh 40 on that 20%, that is 28,000. Guys, this amount is my basic tax payable. Guys, do you go to a restaurant, just have soups and starters and you leave? No. After basic tax comes your surcharge, after surcharge comes your HEC, only then you leave the hotel. Will you keep that in mind, guys? Please tell me. Will you leave the hotel after having soup? No. So you will complete your meal and only then leave. So this is what we are calculating, is just the basic tax. Then after that, will we calculate surcharge also? Yes. And will we calculate cess also? Yes. Alright, so this is basic tax. Now, guys, please tell me, if a resident is 60 years or more, then the government says, listen, I want to give you a slightly bigger benefit, and hence up to 3 lakh rupees, we will not charge you any tax. So 60 years or more, what is the basic exemption limit? 3 lakh. More than 3 lakhs, up to 5 lakh, what is the percentage for that? Same 5. More than 5, up to 10, how much is that? Please tell me in the chat box, guys. How much is that? 20%. And more than 10 lakh, you can earn how much ever more, but you will be taxed at 30%. So please tell me, guys, what is the lowest slab rate in India? 0. And what is the highest slab rate in India? 30%. Alright. And guys, what if you're a resident who is 80 years or more? Then the government says, listen, we want to give you a bigger benefit, so up to 5 lakh rupees we will not charge you any tax. So that is your basic exemption limit. Then the second slab disappears because anyways they've exempted you up to 5 lakh. More than 5 lakh, up to 10 lakhs, straight you go to 20%, yes. And more than 10 lakhs, straight you go to 30%. And guys, seeing all this, a non-resident gets very happy. So a non-resident comes to you, a non-resident who's 40 years or 60 years or 80 years, doesn't matter. Non-residents, we don't need to please you. You don't vote for us. Because you don't vote, that's a very good way of remembering, guys. Because they don't vote, what will be their basic exemption limit? Their basic exemption limit is only 2 lakh 50. What if he's 60 years old? Doesn't matter. What if he's 80 years old? Doesn't matter. So guys, is it important that you're a resident or a non-resident? Yes, it's very important to decide whether you're a resident or a non-resident. Then guys, same slabs here. Yes, resident, the same slabs will apply. That means 2.5 to 5, 5 to 10, and more than 10, same slabs. But will they get higher basic exemption limit? No, no higher basic exemption limit. And if you ever forget, think about it. Do they vote in India? No. So do we need to please them? No, we don't need to please them. All right. Now guys, this was great. Everything was going on very good. This was your basic tax. but then suddenly the government wanted to please the people more. So they said, listen, in your basic tax, I want your votes. Of course, they didn't tell them directly, but they said, listen, I want your votes. So people, all the people whose basic total income is up to 5 lakh, raise your hands. So a lot of people who are first time earners, a lot of middle class people, they raise their hands that listen, our total income is up to 5 lakhs. What happened? What are you giving us? So the government says, we want your vote. You're a large part of India. So hence, we will give you a rebate. Guys, rebate means what? More rice or more wheat or more tomatoes, more potatoes, a new ration card. No, a rebate under section 87A says that we will give you a discount. Rebate is almost like a discount of maximum 12,500 from your basic tax. Yes, you heard it right, guys. Rebate is not after surcharge cess. Rebate is calculated after your basic tax. From your basic tax, whatever is your basic tax, we will minus maximum 12,500 rupees, and this is a rebate under 87. Whom this rebate is given to? This rebate is given to only those people whose total income is what, guys? Total income is up to 5 lakhs. And again, this is only given to residents, because whose vote do we want? We only want residents' votes. So guys, if my total income is 6 lakh 40, will I get a rebate? No. If my total income is 5 lakh, will I get a rebate? Yes. And whether it's 4 lakh 40, will I get a rebate? Yes. So every person in India, of course only individuals, every individual in India will get a rebate if the total income is up to 5 lakhs. Let's calculate, guys, one person's rebate and tax liability. Let's say you have a client whose total income is 4,90,000 rupees. You are the CA, and please let's calculate the tax up to 2.5 lakhs, guys. 0. From 2.5 lakhs to 4.9 lakhs, I want the gap, guys. Please tell me only the gap. This is 2,40,000, and on 2,40,000 at 5% is 12,000 rupees. So what is this tax payable? 12,000. Is this person an individual resident? Yes. So will they get a rebate under 87A? How much is the maximum rebate? 12,500. We will give him 12,000. So guys, will he have any tax liability? No. So there will be no surcharge and cess. But anyways, you have to always check for surcharge and cess. Guys, this is rates of tax. Every time we finish a chapter, we will go and do some more rates of tax. So till now, we've done rates of tax for individual, resident, non-resident, and rebate. Guys, this 60 years and 80 years, I want to just clarify one small point around 60 and 80 years. Please tell me, this is my financial year. This is my previous year, 21-22. When does this year end? Please tell me, guys. When does your previous year end? What is the last day? The last day is 31st March. Guys, there is a person whose 60th birthday is on 1st of April. 60th birthday is on 1st of April 2022. This is 31st March 2022. Please tell me, this 1st of April 2022, he's 60 years old on 1st April 2022. Is he a senior citizen for the previous year 21-22? For this year, is he a senior citizen? No, he is not a senior citizen. Guys, I'll tell you why he becomes. But right now, guys, I'm assuming he's not, because when does he turn 60? He turns 60 on 1st April 2022. That is the next year. Guys, again I repeat. Please tell me, when did he turn 60? He turned 60 on the 1st of April. Is 1st of April in the next year, guys? Please tell me, is 1st of April in the next year? Yes. So is he a resident, or is he a senior citizen in the earlier? No, he's not a senior citizen. But then he went to complain to the court, guys. Very funny case, guys, this was. He went to the court and complained and said, listen, I'm completing 60 years one day before only. Guys, if you refill your Netflix today, that is the 13th of August, if you recharge your Netflix for a year, when will it expire? You know, guys, it will expire on the 12th of August next year. So do you complete 1 year on this day only? Yes, you complete 1 year. So he said that, listen, I completed 1 year, or I completed 60 years on 31st March itself. So am I a senior citizen for this year? The court said yes, yes, and yes. So this is a small concept on the birthday. So please tell me everyone, if I am turning 80 years on the 1st of April 2022, if I am turning 80 years on this day, will I be a super senior citizen in the previous year? Yes, I will be. Yes, I will. Perfect. So I told you the logic also why this happened, guys. Any questions, do let me know. Otherwise, this is rates of tax. We've also clarified the birthday concept, and we'll also clarify a rounding off concept. Guys, as you know, tax is calculated on total income, and let's say your total income is 6,43,242 rupees. This is your total income, guys, 6,43,242 rupees. The government says, listen, we are greedy, but we're not so greedy also. So we would want to round off this total income. They say it is rounded off to the nearest tens. Please tell me, guys, what is the language in the act? It is rounded off to the nearest tens. But what does this tens mean? Does it tens you, this language? Yes. So let me tell you guys, what you do is you ignore this last digit. Sorry. What you do is you ignore the paise. If this is 47 paise, you ignore the paise. And this last digit you focus on. If the last digit is 5 or more, it will go to the next number. If it's less than 5, it will go to the previous number. So this one, is this 5 or more, guys, the last digit? No. So this one will become 6,43,240. Yes, perfect, Chirag. Good answer there. 6,43,240. Guys, what if this was 6,43,248 then and 69? Then 69 will be ignored and 243,250. It will become 643,250. So if it's 5 or more, it goes to the next number. If it's less than 5, it goes to the previous number. This is called rounding off. Guys, rounding off happens once at total income, and it happens once more when the final tax is calculated after surcharge, cess, everything. There are 2 times when rounding off happens. Alright. So this is your first chapter, guys. We're done and dusted with it, and we are also done and dusted with rates of tax. Now I'm going to go to the second chapter, which is called agriculture income. So basics of income tax done. Agriculture income is the next chapter. We'll be starting that in just about 2 minutes from now. If you have any questions, do let me know right now. Otherwise, 2 minutes and we'll start off with the next chapter called agriculture income. Guys, while we discuss agriculture income, we will do yin and yang. So agriculture income, then some other chapter, then back to exempt income, like that. So we'll be looking at the entire portion. Alright, 2-3 minutes and I'll be back, and we'll be back. Thank you. All right, moving ahead in life and in tax, guys. Moving ahead. All right, we're back. Moving ahead. So, moving ahead to the next chapter, and this is by far the happiest chapter, guys, in the book because this chapter doesn't pay any tax. As someone who pays tax and then someone who drives over some potholes very regularly, I feel bad sometimes to pay tax. But because I teach tax, I enjoy it equally, so I don't crib too much about it. But anyways, coming to this chapter is the happiest chapter, guys, because there is absolutely no tax in this case. Let's see what this chapter brings on the table. Guys, can it get some marks? Yes, this chapter and more ahead will get us marks in the exam now. So everyone, guys, let's begin. Guys, this chapter is called agriculture income. And like we saw in GST, guys, does the government have a soft corner for agriculture income or for agriculture? Yes. In GST though, they also have a soft corner for everything like dairy also, poultry also, all life forms, etc. But warehousing also. But here in direct taxes, they can't give all that benefit. So this is only for which culture, guys? This is only for agriculture. So by the way, this benefit of zero income tax is not given to sericulture. It's not given to other cultures like fish culture, pisciculture, or whatever cultures you know, guys. This benefit is not given to those cultures, guys. Is this benefit given to dairy farming? No, guys. Is this benefit given to poultry farming? No, guys. This is not given. So this is only and only for agriculture. I hope you know. So, guys, if there is a company which sells milk, will they be taxed? Yes, but if there is a farmer who's selling potatoes and tomatoes, will he be taxed? No, he will not be taxed under income tax. So here we go. Let's start. Guys, if you have a farmland, and this is your farmland, guys, very beautiful, very long and rectangulish, and you're growing some potatoes, tomatoes, etc. Then, guys, on that and selling, cultivation and selling, is that exempt income? Yes, that is exempt income. Guys, there is no tax on that, so there is no problem there. Next, guys, can I grow flowers and creepers also? Can I grow seedlings and saplings also? Yes. So flowers, creepers, seedlings and saplings, all of that is exempt. In fact, saplings I can grow even outside of the land, guys. I can go if you buy your seeds and your small plants from a nursery, even that is exempt, no problem. So flowers, creepers, seedlings, saplings, everything is exempt. Guys, what if I don't get the time to grow all these potatoes, etc.? So can I rent it also? Yes, even renting, but renting should be for what purpose, guys? Can I rent it for RRR3? No, it is only for renting. For which purposes, guys? Renting for agri purposes is exempt. Next, guys, sometimes you must have seen that next to the agricultural land there is a farm building. This is a farm building. Who stays in this farm building? It's not a farmhouse with a luxury pool and all. No, guys, it's a small farm building where the farmer, his family, and it's a storehouse for all the goods. So, can this farm building also generate income like rental income? Yes. So, that income from farm building, guys, I'm going to call it FB, farm building, even that income is exempt. So these are incomes that are exempt, guys. Cultivation from revenue, from seedling saplings, from farm building, and for renting. All of this is agriculture income. All of that is exempt under a section called section 10(1). By the way, guys, 10 is the happy section because it doesn't pay tax. 10 is the exempt income, and in that the first exemption is for agriculture. But what about selling this agriculture land, guys? What if I sell this agriculture land, guys? If I sell this agriculture land, also, is it exempt income? Guys, it is not taxable. It is not exempt. I hope you're understanding there's a difference, guys. Guys, exempt means it's under section 10. No, that's not exempt, but it's not taxable. So I'm just going to make a small line here and I'm just going to write it here that sale of rural agriculture land is not taxable. Guys, is there a difference between not taxable and exempt? Yes. Exempt is under which section? Exempt is under section 10. Non-taxable, we won't levy any tax, but it's not under section 10. Alright. Guys, this one is not taxable, and this, by the way, this farm is in a rural area, so this is called rural agriculture land. Guys, are we okay? So let's say a couple of examples and you tell me guys if it's agriculture income or not. You are growing tomatoes and you're selling tomatoes. Is that agriculture income? Yes. You are helping, you have a farm building and you're letting other farmers also store their goods in your farm building and you're getting some rental income. Is that also agriculture income? Yes. You've given your agriculture land to another farmer to grow some sugarcane. Is that agriculture income? Yes. Guys, I'm the person who buys the sugarcane from you and sell it. Am I doing agriculture income? No, I'm not doing agriculture income. Agriculture is basically not buying and selling, but it is cultivating and selling. I hope that is understood. Guys, this is rural agriculture land. Guys, what if this land becomes, or this land is an urban area? What if this same land, guys, this same land with the same farm building is in urban area? So what will it be called, guys? Urban agriculture land. Guys, it's very rare to see agricultural land in urban areas, but still, what if there is urban agricultural land? Can this be in real life very common? No, guys. But can it be asked in the CA exam? Why not? So this is urban agricultural land, and guys, urban agricultural land is the same treatment as rural agricultural land, except two differences. What are the two differences? First, guys, if you sell this urban agriculture land, sale of urban agriculture land, is this not taxable? No, guys, this one will become taxable. And it's pretty logical. Please tell me, do you think urban areas are expensive? Land in urban areas, do you think is expensive? Yes. So if you sell urban agriculture land, this is taxable. And second, guys, what if in this farm building, which now is in an urban area, what if you made a hotel and these are all rooms? Then guys, how do we know? Can we come and check it? No, it's not possible for us to check whether there are tomatoes staying there or people staying there, and hence income from farm building is also taxable. So these are two differences. When it's urban agriculture land, these two are taxable. When it becomes urban agriculture land. I hope this is clear, guys. So this is urban agriculture land, this is rural agriculture land. Guys, now that we know the difference, let's find out what makes a land urban, what makes a land rural. Alright, so I'm just adding another slide. Please tell me what is urban and what is rural. Guys, we will understand what is urban first. If we understand what is urban, everything else is rural. Example, guys, if I tell you what is a color photograph, can you figure out what is a black and white? Yes, same way, guys. I'm going to tell you what is urban, and if you know what is urban, everything else is going to be rural. Alright. Guys, this is Mumbai. It is a huge city with a huge population. Is Mumbai's population more than 10 lakhs? Yes, guys. Mumbai's population is much more than 10 lakh rupees. So is the entire Mumbai urban area? Yes. Not just that, beyond that, even 8 kilometers beyond that, even this is urban agriculture land. So I'm marking, you tell me guys if this is urban. Guys, is this land urban agriculture land here? Yes. On that eye, is this urban agriculture land here? Yes. And on this line at 8 kilometers, is this also agriculture land, urban agriculture land? Yes. What if the land is here, guys? Then what does it become? Then it becomes rural agriculture land. So anything beyond 8 kilometers is rural, but we're not going to see both. They're only going to see one. Next. What if this is not a city like Mumbai? What if it's a smaller city, something like Nasik? Guys, Nasik is a town which is close by to Mumbai. It's almost like Mysore and Bangalore. So Nasik is a smaller town which has a population of more than 1 lakh, but up to 10 lakhs. Sorry, up to 10 lakhs. More than 1 lakh, up to 10 lakhs. More than 1 lakh and up to 10 lakhs is the population. Here also, guys, this is urban, and beyond that 6 kilometers is going to be urban. Even this is going to be urban. So this is what is urban agriculture land. Please tell me, is this urban? Is this urban? And on this line also, is this urban? Yes, all three are urban. Next, a smaller town is smaller than that also. Let's say this town is called ABC and the population here is more than 10,000 up to 1 lakh, guys. This is a smaller town, and here Up to 2 kilometers only, guys, is urban. So please tell me, is this urban? Is this urban? And on this line also, is it urban? Yes. And guys, in India, surprise, surprise, there can be sometimes a very small town which has a population of up to 10,000. But shouldn't this be a village up to 10,000? Yes. But what if the municipal records say that this is a town? A very small town. Then in that case, there is no limit ahead of it. Only this 0 kilometers they say, but 0 kilometers means only the boundary of the municipal boundary, that is urban area. So is this urban land? Yes. Is this urban land? Yes. Is this urban land? Yes. And is this also urban land? Yes. So please tell me, guys, now, do you know what is urban agriculture land? Can you tell me the kilometers when I tell you the population? If it's more than 10 lakhs, how many kilometers up to is urban agriculture land? 8 kilometers. What if it's more than 1 lakh up to 10 lakh, then how many kilometers? 6 lakh, 6 kilometers. What if it's more than 10,000 up to 1 lakh, then 2 kilometers? And what if it's the smallest town up to 10,000 population, then that same town, 0 kilometers, that is considered to be urban agriculture land. So guys, now that you know urban agriculture land, do you know what is rural agriculture land? Obviously, guys, if I tell you what is a color photograph, you always know what is a black and white photograph. And guys, do you know the two differences between urban and rural? Yes, you know the two differences also. This more or less summarizes your agriculture income. But guys, I'm going to go one step ahead and I'm going to tell you a little story about how someone got a little greedy. So this is the agriculture land, as you know, and you were growing tomatoes earlier here, potatoes earlier here, but someone said, listen, in India, growing tea is a great business. Growing tea, making growing tea leaves and then converting them into tea powder and selling it is a great business, because apparently in India people consume 8 cups of tea a day. Is that true? Absolutely not. It's only a rule. This is called Rule 8. I'll tell you more about it. But anyways, these are all shortcuts, guys. So remember the rules. So someone told you to grow tea, and this is now, guys, blue color tea, as you can see on the screen. This is tea growing. These are tea leaves sprouting, and you plug them. You take them to a nearby factory. You crush them. You make powder, and you sell them, and you make a lot of money. Please tell me, guys, are there some components of agriculture income in this? Yes, but is there some component of business also in this? Yes. So these kind of things are called composite income, guys. They are called composite. Composite basically means combination. This kind of income is called composite income. There are 4 composite incomes. We'll see back to back. The first composite income, guys, composite income means it has elements of both agriculture as well as business and profession. The first composite income is tea business, and Rule 8 says that if you're growing tea leaves and then converting into tea powder, then whatever is your profit means, guys, income less expenses. So please tell me yes or no. Will you sell these tea powder from the leaves? You'll make powder, and so will you sell that tea powder? Yes. From that, guys, will you manage expenses like salary, electricity, diesel, depreciation? Yes. And whatever the final number is, of that 40% will be taxable as PGBP, and the remaining 60% will be exempt under agriculture. Guys, my suggestion would be, don't buy hard this 60%. If 40% is PGBP, obviously the balance is going to be agriculture. So remember this 40%. So this is tea business, not tea leaves. This is tea business. And the tea business rule is Rule 8, because apparently Indians consume 8 cups of tea a day. Thinking about it, I've consumed already 2 cups of tea, one in the morning, one just now when I started the class. There's a guy who came and gave me tea. So I consumed 2 cups of tea. But in India, generally they consume 8 cups of tea. This is what is tea business. This is what is composite income. Guys, please tell me, in composite income, what will you split 40 and 60? Will you split the profits or will you split the sales? What will you split, guys? You will always split the profit. You will always split the profit. You will never split the sales. So you will get your income minus the expenses. That profit is what you will split. Next, guys, is a rule called Rule 7B. Apparently in India, coffee, I have tasted great coffee in south of India, guys, and the problem is, now that I'm back in Bombay, I don't enjoy the Bombay coffee. But anyways, it's apparently said that in India, people drink 7 cups of coffee, rule 7, and that is B. B is for barista. Barista is the person who makes your coffee. Yes. So if you're a good coffee maker, you could make a good barista. So rule 7B says again, coffee also 40% is PGBP and the remaining guys is agriculture income. So this is rule 7B for coffee. That is rule 840. Next, guys, this coffee is 40% because you're doing a lot to the coffee. You're growing the coffee, you're curing the coffee, you're roasting it, you're grounding it, you're flavoring it, you're doing a lot and hence 40%. But guys, if the coffee is only grown and only cured basically means you make it safe so that it's not spoiled by insects, etc. So only grown and cured, then are you doing less? Yes, so the percentage also becomes only 25%. And this is the balance. You don't have to remember the balance, guys. Balance is always mathematics. All right. So rule 7B, rule 8. Next, guys. Guys, I'm not very sure if you've seen it, but people down south must have seen it. If you've seen rubber plants, guys, I myself have only rarely seen it once or twice. Guys, rubber plants, rubber is grown basically on a plant. That rubber is removed and then it's synthetically processed to make actual rubber that we use. So that rubber is also some part of composite income. So that is a rule called rule 7A. In that you're doing a business which is basically involved in rubber. And is there some part of agriculture, some part of PGBP? Yes. What part is PGBP? 35% is PGBP. Remember in the exam they will confuse you guys. They will give you sales, they will give you other incomes, but guys you have to find out the profit and then split. PGBP is taxable, agriculture income will be exempt. And last guys, for which I will have to draw this and I will have to draw another factory. So here we go. I'm drawing two things on the screen here. Guys, everyone think, see how Indians are very smart. This is a farm where you're growing potatoes. This is a farm, let's say we are growing tomatoes. So this is tomatoes, T for tomatoes. Very nice red, very good juicy tomatoes are being grown here. And you don't want to sell these tomatoes. You are giving it to your own factory which is making ketchup. So guys, this is a farm where you're growing tomatoes. This is a ketchup factory where you're making ketchup. Please tell me which of these, this is a business and profession, which of these is exempt? The farm income will be exempt and the business and profession will be taxable. As a very smart Indian who doesn't want to pay too much tax, you will want this income to be higher or this profit to be higher, and you will want here the profit to be lower. And how do you do that? Manipulate it. The best way to manipulate it, because guys, this is your own factory and this is your own farm. So the best way to manipulate it is increase the sale price. If I increase the sale price, guys, here, please tell me yes or no. Will my profits go up if my sale price goes up? Yes, my profit will go up. And if my profit goes up, guys, will that profit be exempt? Yes, that profit will be exempt. Am I going to be a very happy person? Yes, very happy person. But if my sale price is going up, for my ketchup factory, will my cost also go up? Because this sale price is this person's cost. So the cost will also go up. So here will the profits go down? Yes, the profits will go down. And guys, here also your taxes will go down. So you are very happy by manipulating it. Let's take an example, guys. Tomatoes are actually can be sold for 40 rupees a kg, but you are selling it for 80 rupees a kg to your own factory. Guys, 80 rupees, that means is your sale price high? Yes. Will your profits be high? Yes. And you will not be landing up paying any taxes, you're happy. But 80 rupees means the cost is also high for the factory and the profits are low and the tax will be low. So overall, you've manipulated the government and you're feeling very happy about it. The government says, listen, you are smart, but I'm smarter and I can make laws. So they made a law called Rule 7. Rule 7 says that whatever this transfer is has to be at market value. Any such kind of transfer to be at market value. Any of this transfer is to happen at market value. What if I don't know the market value? Guys, market value is, I will know if I'm selling these tomatoes to third parties. What if I'm not selling it to third parties? Then you can also take cost plus profit. This is the concept, guys. You can also take cost plus profit. So let's do a quick rerun on this entire thing, guys. This concept is called composite income. Composite income, how can it be asked in the exam? Recent exam, guys, this May exam, there was one question on composite income. So first, guys, composite income, what are the four kinds of composite incomes that we know? First is tea business, then is coffee business, then is rubber, and then is all others. In composite income, will you find out the profits? Yes, guys, from the sales you will minus all the expenses, depreciation, etc., and you will find out the profit. And then will you split the profits? Yes. If it's tea business, then rule 8, you will split up 40% into business, remaining into agriculture. If it's coffee and a lot of things are done on the coffee, then again 40%. If it's coffee only grown and cured, then 25%. And if it's any transfer, then the transfer should happen at market value. If you don't know the market value, don't worry, you can do it at cost plus profit. This is the concept of composite income. Let's have some fun, guys. Let's put some question on the screen regarding composite income, and let's see if you are able to answer that. I'm just uploading a file here. We're doing a May question on composite income. Here we go. This is the May paper. Yes. Here we go. Yes, guys, this is the paper. I'm looking at one question which is from composite income. Here it is. No. Yes, guys, this is the question. Let's find out if you can answer this for 4 marks. Everyone eyes on the prize. Mr. Kabra is engaged in the business of growing and curing for the processing coffee in the state of Karnataka. So are you doing much on the coffee, guys? No, you're only growing and curing, and it is coffee. Guys, is this composite income? Yes, this is composite income. Which rule applies in this case, guys? Rule applies is rule 7b. And what percentage is business and profession, guys? Business and profession is 25%. So whatever final profit you'll get, 25% is business. Agriculture income will be 75%. Perfect. The whole of coffee grown in his plantation is cured. Relevant information pertaining to the year ended 31st March are given here under. So now our job, guys, is to calculate the profit. Opening balance of the car, guys, we have nothing to do with the opening balance, but we can calculate depreciation. So on 3 lakh, guys, assuming the car is used for the whole year, 15%, guys, is 45,000. So this is an expense. Yes, this is an expense. Depreciation on car. Assuming the car is used for business purpose. Opening balance of machinery on 15 lakh, again 15%. How do I know the percentage, guys? Because I know PGBP, you will also know it when we revise very soon. So the rate of depreciation is 15% here also. Expense incurred in growing coffee, can I minus 3 lakh 10? Yes, that's also an expense. All expenses can be minused. Next, expense of curing coffee, that also I can minus. This is 3 lakh, again I am minusing. Next, sale value of cured coffee. So this is my sale price. I'm taking the income here. Moving ahead, guys, the car is used for agricultural operation and the machine was used for coffee curing business operations. Great, so it is business expense. Compute the income arising from the above activities for the year and the written down value as on 1/4/2022. Guys, these are my expenses. So 13 lakh 20. Excellent, Venkat. Good calculation there. Guys, some calculators are working faster than the others. Good job. So on 13 lakh 20, guys, please tell me how much will be business and profession, which is taxable. 25% of this, so 25% of 13 lakh 20 is 3 lakh 30,000. Will this be taxable? Yes, this will be taxable. And guys, will the balance be agriculture income? Yes. And will it be exempt? Yes. Under which section? 10(1). And what will be the written down value, guys? See, please tell me, guys, does the car know that is being used for exempt purposes or taxable purposes? No, guys, car does not know. So for car, the written down value is 3 lakh minus 45,000. And for machinery, it is 15 lakh minus 2 lakh 25. So do I have to split that also? No. Depreciation is done normally. There is no change in depreciation. As this is a question for 4 marks, and you will not believe it. This question word by word, guys, except Mr. Kabra, the name was different. This exact question was in the module. If you don't believe me guys, this exact question, when we look at the module, I'll show you this exact same question in the module, including the numbers are the same guys. So please do the ICI module questions well, because they are very often repeated in the exam. Yes, so that is the question on composite income. Moving ahead to the last part guys, please tell me, if you were like Mr. Whichever sum we just saw, if your taxable income or your PGBP income is, let's say, 5,20,000, and let's say your agriculture income is 8,80,000, and you are an individual, please tell me here 5,20,000, 8,80,000, on which income will I pay tax? I will pay tax only on 5,20,000. So on 5,20,000 guys, I am ready to pay tax. Let's calculate guys, on 5,20,000 how much will be the tax? Up to 2.5 lakhs guys, how much? 0. From 2.5 to 5 lakhs, how much? 12,500. And from 5 lakh to 5.2 lakh, what is the gap guys? 20,000. 20,000 into 20%. Yes, I use the calculator for that. I'm ashamed, but yes, that's what happens. So this is 16,500 guys. Is this the tax that I'm ready to pay? Yes, into 104%, that is surcharge and cess. So 16,500 into 104 is 17,160. Guys, this is the tax I'm ready to pay on 5,20,000. I've written a check, I've signed it, and I'm ready to pay 17,160 is the tax that I'm ready to pay on this. So I'm just writing it here, tax 17,160. While I'm ready to pay this amount, my CA calls up and listen, you do not calculate tax like this when it is agriculture income. You use a scheme of partial integration. So I say, what is the scheme? Tell me a little more about it. So he says this is in rates of tax. So guys, this is part of rates of tax, but we're doing it now because of course rates of tax we're doing in parts. He says this scheme of partial integration, you have 3 steps. The first step, we shock you. Step 1 is the shocking step. Why is it so shocking? I'm writing S for shocking. They take your agriculture income and your taxable income and they tax you on all of that. So will they take my 5,20,000? Yes, obviously. But will they also take my 8,80,000? Yes, they will also take that, and they will total it up. 8,80,000 plus 5,20,000 is basically 14 lakhs, and on 14 lakhs they will calculate the tax. Guys, we'll have to do this calculation. Be with me while we do this calculation of 14 lakhs. Calculators, anyone who's invested in a calculator, you are the person to go now and answer please. On 14 lakhs guys, what will be the tax? 232,500, perfect Venkat. And on that guys, will there be, have you calculated surcharge and cess also? No surcharge, but there will be a cess. So with cess, how much was that? So 2,32,500 into 104%, which is basically 2,41,800. If you want, we can just check this up to 2.5 lakhs, guys, nothing. Then 12,500, then 1 lakh, and then from 4 lakh at 30%, 4 lakh at 30% is 1,20,000. So this is 2,32,500. Absolutely right, guys. So with cess, this is the tax payable. Guys, this is shocking. Why is it so shocking? Because they included agriculture income. But anyways, the second step is calming you down. They say don't worry. In the second step, they say we will calm you down. We will take your agriculture income, that is 8,80,000, plus we will take your basic exemption limit, that is 2,50,000, and we will calculate tax on that and we will minus it. So don't worry, we will give you concession on 11,30,000. We will calculate tax plus surcharge plus cess. So let's do that, guys, on 11,30,000 next. Guys, 11,30,000 on the first 2.5 lakh 0, then 12,500, then 1 lakh, then on 1,30,000 at 30% is 39,000. So this totally is 1,51,500 into 104%, is 157,560. Venka, that is good calculation. And guys, the difference of the two is what is step number 3. So step number 3 is just the difference of the two. And what is the difference? Difference is 84 to 40. So this is what you need to pay. Guys, is this a higher amount than what you actually thought? Yes, it is a higher amount. You thought of paying only 17,000. They are charging 84,000. Now, why did this happen? And why am I calling this not the scam or not the scheme, but I call it the scam of partial integration? Because I only wanted to pay this much tax, but I'm going to be paying this much tax. Why did this happen? You know what happened is they took your agriculture income to push your taxable income into a higher tax slab. Let me repeat it in simpler words. Simpler words. Your taxable income was in which tax slabs? 0%, 5%, and a little bit in 20%. But with 8 lakh 80, they pushed you in the 30% slab and the 20% slab. So hence you landed up paying more tax. So this is what is called a scheme of partial integration. I call it the scam of partial integration. So guys, is it used always? Because I don't use this in my calculation. No, it's not used always. It is only used when two conditions are fulfilled. What are these two conditions? First, you should be someone who enjoys a basic exemption limit. Example, you should be an individual or an HUF or an AOP BOI or a AJP. Basically, you should be any of these four people. So guys, will Reliance Industries ever be subject to the scam? No. Will PwC partnership firm, will it ever be subject to the scam? No. So you should be someone who enjoys a basic exemption limit, example individual, HUF, AOPBY or AJP. Next, and very important guys, second condition, you should have agriculture income more than 5,000 and taxable income more than basic exemption limit. That means guys, are you enjoying both the incomes? Yes. Are you enjoying best of both worlds? Yes, the government doesn't like it. The government never likes it when you enjoy so much income. So if your agriculture income is more than 5,000, remember 5,000 is a very small amount and your total income is more than basic exemption limit, only then this will be applicable. So why does a farmer not go through this guys? Because a farmer does not have basic exemption limit or total income more than basic exemption limit. And why do I not go through this? Because I don't have any agriculture income more than 5,000. So if any of this is happening, then this scheme will apply. Guys, please let's recap the scheme. The scheme is called scheme of partial integration. Does it apply everywhere? No, only when you enjoy basic exemption limit and only when you're above these threshold limits of income, agriculture income more than 5,000, total income, sorry, taxable income more than basic exemption limit. And first step is shock them, second step is calm them, and the third step is the difference between the two. And with that guys, we've covered different legs of agriculture income as well. Perfect. Guys, in the module, there is no chapter like agriculture income. It is joined with exempt income. So we will do the other part of exempt income. And when we finish that, we will come back to agriculture income module and we will look at the module as well. Right now, I'm keeping the screen up for any questions that you might have. Guys, as part of the Unacademy initiative, we also have to give you enough time to ask queries. So we've been told that every 1.5 hour we have to open up for queries. So any queries that you have or you might have or you think you have around DT, also now around GST, you can let me know. I'm going to grab some water, come back and we will continue. Guys, we're starting off the next chapter, not exempt income. House property is what we're starting and then we will come back to exempt income. So we are going to do this seesaw between two chapters. Yes, 2-3 minutes and we'll be back. Any questions in the meanwhile in the chat box, please. Anybody from Kerala? Nice, nice. Um, all right, good conversations are happening. Guys, we are back. Whether you're in Kerala or in Mumbai or in Bangalore, guys, we are all looking at a chapter called house property. Conversations are happening in a language I don't understand, but it's good. All right. Guys, looking at a chapter which is very important from CA Inter perspective because one sum from this chapter is guaranteed in your exam. So, does it require extra attention? Of course. Will we look at the module question and will we look at questions? Because till now we haven't looked at any question. Doesn't matter. For this one, we'll cover the quick book, we'll cover everything, and then we'll also look at the material. So we have about 45 minutes to go. I don't think this chapter will be completed in 45 minutes because I want to go slow, but I sincerely feel we'll cover a lot of concepts in this chapter. So let's do this, guys. This is called income from house property. We are just going to call it house property. So guys, another sad fact of life is HP. Till you join the CA course is Harry Potter, but once you join the CA course, HP suddenly becomes house property. So with that, guys, let's start income from house property. Guys, just want to have a small discussion with you before we enter this chapter. Guys, can you have any income from a house? Yes, you can rent the house, you can use the house, you can have incomes from house property. So this is a chapter or this is a head of income, which is basically looking at the incomes that you earn from house property. So if you give the house property, let's say you buy a house with a lot of hard work and you give it on rent, are you offering that rent to the government to tax? Yes. And because you're offering, does the government give you deductions? Yes. So house property in a nutshell, guys, will there be incomes from house property? Yes, there will be incomes. And from that, will the government give you deductions? Yes, that's the rule, guys. Give and take relationship. They will give you deductions. But here, guys, there are only three specific deductions. That's the beauty of this chapter, guys. Only three deductions, income, and that's this chapter in a nutshell. Now, let's try and understand first what are the deductions, and then we will go on to incomes, and then we will move ahead on this chapter. They say that we will give you only three specific deductions. So what are these deductions for income from house property? Let's see what are these three deductions. Guys, all are focused on deductions. They say the first deduction we will give you is if on that house property you have paid any municipal taxes. If you've paid any municipal taxes, we will give you a reduction, but the keyword there is paid, guys. You have to pay it during the year. So if you pay it any time during the year till 31st March, we'll give you a reduction. But what if you don't pay? Then sorry, no deduction. What if I pay next year? Then next year deduction. Whenever you pay, you'll get the reduction. So let's say the exam question says municipal taxes 10,000 paid this year. Can I take 10,000 deduction this year? Yes. What if they say paid by tenant? Then sorry, you cannot take a deduction because it is paid by the tenant. But what if it's paid by the tenant and reimbursed by you? Then ultimately you have paid it, so hence you can minus 10,000. So guys, it has to be paid and it has to be borne by you. Only then you can take a deduction. What if you paid 10,000 for this year and you also paid 5,000 for last year? Last year's you paid this year, so will I get 10 plus 5, 15? Yes, whatever you pay, guys. I repeat, whatever you pay, you will get a deduction. So this is the first deduction, which is municipal taxes. Second, guys, to rent out a house, the house should look clean, so I can get it painted. The house should have a nice door which opens well, so I should get it repaired. The house should have good taps, I should have repaired them. So I have a lot of expenses in maintaining the house property. The government says I don't want to go into one detail of which tap you repaired, which color you painted your wall. So I will give you a flat deduction, which is called standard deduction, but I'm going to use the shortcut ad hoc deduction. Ad hoc means random, standard deduction. Guys, this is 30% of your annual value. So we'll figure what is the annual value, and of the net annual value, 30% will be the ad hoc deduction. Guys, does it cover painting the walls, repairing the taps, etc.? Yes, it covers everything. Will I get any other deduction beyond this? Yes, there's one more, but for painting, etc., you will get no other deduction. Does this also have to be paid? No guys, this does not have to be paid. In fact, what if you never paint your house? You can still take this 30% deduction. Yes, the government doesn't ask you anything. They give you a flat deduction of 30%. So this is the next deduction guys. This was the first one, this is the second one, and now the third one. Please tell me, in India guys, do we buy house property with our own money or with loaned money? Guys, we buy it with loaned money. We generally take loans, and that loan can be from a bank, it can be from a financial institution, it can be from a relative, it can be from a brother, father, etc. It can be from anyone, and on that loan, are you going to be paying interest? Yes. Interest, whether it's paid or payable. Again guys, not on payment basis, there's only one on payment basis. Any interest expense, whether you paid or not paid, will you get the deduction? Yes, you will get the deduction. Is there a limit of 30%? No limit guys. How will you remember this? Please remember, are you offering something to income? Yes, so the government will give you as much deduction as you deserve, no limitation. So these are the only three deductions that you have in house property. Yes, only three deductions that you have in house property. Guys, what if they give you some expenses? Like what if they give you house insurance, fire insurance premium paid? Can you minus that? Please tell me, can I minus any other deduction besides this? No. Excellent Venkat, good Renard. You cannot minus any other deduction besides this. Guys, what if they tell you that this house is on a ground which is on rent, and the ground rent you have paid? Will you take a deduction for that? No guys. I'm telling you one more time, not even 3.5% deduction, only 3 deductions. Yes. So they will give you in the exam to confuse you, house insurance, ground rent, etc. All that you will not get any deduction. This is a deduction from house property. Now, let's take an example guys. This is your house property and you've decided to give it on rent. So this kind of property is called let out property. This kind of property is called LOP. LOP basically means let out property. Let out property is nothing but a property which is given on rent. Now you are saying that the actual rent that you're getting is 1 lakh rupee a month. So the actual rent that you're getting is 12 lakhs, which is basically 1 lakh rupee a month. So you are getting actual rent of 12 lakh, but the government doesn't want to believe you. They say, what if you are faking it? What if you're actually getting more, but you're not showing it because you don't want to pay tax? So they say, while you are saying actual rent, we will compare it with the rent that we are expecting from this property, which is called expected rent, also called reasonable lettable value. So guys, while in GST the government trusted us a lot, here the government doesn't trust us too much. So they say we will compare actual rent with your expected rent, also called reasonable lettable value. How do they find out this expected rent? Does the Prime Minister, Mr. Modi, come to your house property, check your house property and then give you, or does your Chief Minister do that? No guys. They ask these three people, that is municipality, figures the standard. That's a shortcut guys. Municipality figures the standard rent. So they will ask the municipality that, municipality, can you tell us what should be the rent of this property? The municipal value says the rent of this property should be 10 lakhs. They ask neighboring houses, how much do you think should be the rent of this? They say it should be 9 lakhs. So whichever is higher, obviously guys, for income, please remember whichever is higher. For deductions, obviously whichever is lower, but for income, whichever is higher. So municipal value or fair rent, whichever is higher, but subject to a standard rent. Standard rent is like a ceiling, so that landlords don't abuse the right to collect very high rent. They have put a standard rent. In the exam, they will give you these values. Let's say they put standard rent of 8 lakhs. So then which one will I take? 10 lakh or 9 lakh, which is higher? 10 lakh. But subject to the limit of 8 lakh. So your expected rent would be 8 lakh. What if I make this 9.5 lakh? Then 10 or 9, whichever is higher, 10 or 9, 10 is higher, but subject to the limit of 9.5 lakhs. What if I make this 11 lakhs? Then 10 or 9, whichever is higher, which is higher, 10 lakh, subject to the limit of 11. Are we within 11? Yes. Guys, almost think like this, like a ceiling. This ceiling, guys, can I touch the ceiling? Yes. Can I touch 11? Yes, but I cannot go above it. Yes, I cannot go above it. So standard rent is that ceiling. What if standard rent is not given in the exam? Then no problem, 10 or 9, whichever is higher. What if 9 is also not given? Then 10. What if nothing is given? Then no problem, guys. Most exam questions, nothing here is given. So this is municipality figure standard, yes, and this will give you your expected rent. Please let's again calculate municipality figures standard 10, 9, 8. So we will have 8 lakh as the expected rent. So the government is expecting at least 8 lakh rupees from this property. Okay, now government is expecting 8, you are saying 12. Let's see now what else are the adjustments here. Guys, the person you give the house on rent to has not paid you 2 months rent. You give the house for 12 months. This 12 lakhs is for the 12 months, but guys, he's not paying you two months rent. Can it happen? Yes, it can happen that some people default. Just like in business, there are bad debts. In this house property also, there can be bad debts. They are called unrealized rent. There are some conditions. When you fulfill those conditions, that is called unrealized rent. And this unrealized rent, let's say 2 months rent is unrealized. Guys, are you earning that income or are you going to earn that income? No. So will the government allow you to minus it because you've not earned it? Yes. So unrealized rent you can minus. Yes. So 2 lakhs I've minused. So my actual rent becomes 10 lakhs. But can I minus unrealized rent from expected from the other side? No, they say, listen, we don't care about your unrealized. We don't care about anything. We just care about 8 lakhs. You should get at least 8 lakhs from this house property. So unrealized rent will only bother actual rent. It will never bother expected rent. Nothing bothers expected rent, guys. It is very focused that this is what they want to earn from this house property. Next, very important concept, guys. Let's say this house, while you had rented it out for 1 month, guys, for 1 month, this house was vacant. Vacant means what? Is there some tenant staying in that house? No. Are you staying in that house? No. No one is staying in the house. Guys, all you can hear is just emptiness and silence. No one in the house. That is called vacant or that is called vacancy. And does that lead to a loss? Yes, there is a loss. For 1 month, you could not rent it out. So hence, what is your vacancy loss, guys? Your vacancy loss is 1 lakh rupees. Please tell me, guys, do you want to reduce this vacancy loss from that 12 lakh or that 10 lakh? Yes, you want to, because you are telling the government that government, this house was vacant and it's a loss. Please minus it because I have calculated for 12 months. Guys, always you will calculate for 12 months, assuming you have the house property for 12 months. But the government says, listen, what if you're fooling me? What if you're fooling me? You can always say the house is empty. I cannot send the prime minister to check your house. So what if you're fooling us? So hence the government made a condition. They said that you can minus vacancy loss only if your AR is more than your ER. Now please tell me, guys, is your AR more than your ER? Yes. If your AR is more than your ER, can I minus vacancy loss? Yes, I can minus vacancy loss. How much is that? Vacancy loss is 1 lakh. So 1 lakh I can minus. What is the value? The value then is 9 lakh rupees of actual rent. Yes, actual rent is 9 lakhs. And once you do this comparison, when you take vacancy loss, you will ignore this. After that, you will ignore the right hand side part. You will not look at that part. So I repeat, guys, what is vacancy loss? Vacancy loss is when there is no one in the house, not even you, not even SOP, not even LOP, nothing, no one in the house. That is called vacancy loss. Vacancy loss, guys, is basically based on the last rent. The last rent was 1 lakh rupees, so hence the vacancy loss for 1 month is also 1 lakh. Can you minus vacancy loss? You can minus it only when your AR is greater than your ER before that vacancy loss. I'm going to change the vacancy loss to 2 months now, or let's say 3 months. The house was vacant for 3 months. First, do I have to calculate for 12 months? Yes, I have to calculate for 12 months, guys. I will minus unrealized rent. Yes, and from the balance, can I now minus vacancy loss of 3 lakh? Question is the same. Is your AR greater than ER? Guys, please tell me, is your AR greater than your ER? Yes. So hence, can I minus the vacancy loss? Yes, I will minus 3 lakhs. And like I told you, once your AR is greater than your ER, then you ignore ER. So what is this? 7 lakhs. But will I take 7 or 8, whichever is higher? No, guys. Once you minus vacancy loss, you have to ignore your ER. So this now 7 lakhs is my answer, is my GAV, that is gross annual value. I'll repeat this entire calculation one last time, guys. This is AR, this is ER. Basically, the government says whichever is higher, we want to take. Actual rent is for 12 months. Yes, expected rent is also for 12 months. But what is vacant? Should I take it for only 9 months? No, you always start with 12 months. Then, guys, if there is any rent which is not receivable, that is bad debt, unrealized rent, can I minus that? Yes, there are 4 conditions which I'll tell you. The star mark is the 4 conditions. Next, guys, can I minus vacancy loss? First, not every question will have vacancy loss. If there is vacancy loss, first calculate that amount. Next, ask yourself, before minusing vacancy loss, is your AR greater than your ER? Yes, this is 10 lakh, this is 8 lakh. So is it greater? Yes, this is greater. Once it is greater and once you're minusing vacancy loss, then you ignore ER completely. So your vacancy loss is 3 lakh. So I will minus that 3 lakh. So what is the balance? 7 lakh. That 7 lakh is called gross annual value. But this 8 lakh is more, no? Doesn't matter, guys. Once you minus vacancy loss, the remaining ER has to be ignored. This one has to be ignored. Alright, so this is my gross annual value. Yes, this is my gross annual value. But guys, what if the house is bought only on 1st of September and given on rent only for 9 months? Then it will be 9-month calculation. Otherwise, guys, always 12-month calculation. And guys, when can I minus unrealized rent? I can minus unrealized rent when 4 conditions are satisfied. Legally vacate our building. The shortcut is legally vacate our building. What does this mean? Guys, you've sent him a legal notice or you've initiated legal proceedings against him because he's not paying you rent. You asked him to vacate your house property because if he's not paying you rent, will you let him stay in your property? No. No other property of yours is under his custody. The government wants to ensure, guys, this unrealized rent is not being faked. Because what if you're actually taking cash and saying unrealized rent? And hence, no other property of yours should be with him. And last, guys, you should have a bona fide agreement. Bona fide means a proper legal good faith agreement with that tenant. Legally vacate our building. Is this important? No. But is this ARER concept important? Yes, very much. In the exam, guys, if ER is not given, then don't worry, then just fulfill the calculation based on AR. Venkat, looking at your question, sir, AR after deducting UR for VL, AR after deducting UR, yes, for VL. So first is unrealized rent and then vacancy loss, always. So guys, is there any condition for minusing unrealized rent? Yes, there are 4 conditions, but do you have to compare any prices? No, you don't have to compare. Unrealized rent you can minus always. After minusing unrealized rent, then check whether you can minus vacancy loss or not. Guys, this is the concept of GAV. Quick recap, AR versus ER. What if its UR is less than ER? Arjun, you'll have to give me numbers, please. Guys, don't confuse yourself too much with this. It's very simple. We will do more sums also on this, but right now just putting some random numbers here. You tell me where I can minus it or not. My AR is 10 lakhs. Forget ER right now. My AR is 10 lakhs. I have unrealized rent of 50,000. All the 4 conditions are satisfied. Please tell me yes or no, guys. Can I minus this unrealized rent? Yes, without thinking also you can minus unrealized rent 50,000. So what is my actual AR now? 9 lakh 50 is my actual AR. Next, my expected rent is 9 lakh rupees. Please tell me, guys, yes or no. Can I minus my unrealized rent from ER? No, guys, nothing will bother your ER. No unrealized rent, no vacancy loss, nothing you can minus from ER. Guys, please tell me, can you disturb ER for anything? I'm not getting the required answers, guys. If I don't get the required answers, I will not know what pace to keep. and I will move forward according to my whims and fancies. So if you are here, please tell me, can I minus any unrealized rent or any vacancy loss from ER? No, I can't minus because this is firm. They want 9 lakh rupees. Next, I have a vacancy loss of 1 lakh rupees. Can I minus it? Check. Is my AR greater than ER? Yes. So can I minus vacancy loss? Yes. What is my vacancy loss? 1 lakh. Yes. So how much is my actual rent now? My actual rent is 8 lakh 50. But ER is more. No, sir. I should take ER. No. Once this symbol is there, after that you will ignore your ER. So what is my GAV? My GAV is 8 lakh 50,000. Are we clear, guys, with this? Any questions? Let me know in the chat box, please. Perfect, all clear. Okay, guys, now that I have my GAV of 8 lakh 50, please tell me, am I offering something to the government for this house property? Yes, I'm offering 8 lakh 50. Guys, before your exam results, do you go to the temple and do you give sweets or a coconut before the god? Yes. And if you do that, guys, will you also get something good in return? Maybe. So same way in tax also, give and take relationship. Are you giving something to the government, guys? If AR is less than ER, will we deduct? No, absolutely not, Arjun. I explained. If AR is greater than ER, only then you will minus VL. I hope that is clear. All right. Guys, the VL will always be after UR. Guys, please tell me, did you pass your 10 standard first or did you pass your foundation first? Any answers? Venkat, did you pass your 10 standard first or CA foundation 10 standard? So guys, your unrealized rent always first. After minusing unrealized rent, then do the comparison. I hope that is clear, guys. Yes, all right. Guys, now are you offering something to the government? Yes, I'm offering 8 lakh 50. So will the government give you 3 deductions? Yes. First deductions, guys. What is the first deduction? The first deduction is municipal tax, but only if you have paid. Yes. Guys, we follow accrual system of accounting. In accrual system of accounting, we don't have to actually pay. You can take a deduction without paying, but municipal tax they want you to pay. So let's say my municipal tax is 50,000 rupees that I have paid. Can I minus that? Yes. And this 8 lakh rupees, what do I call this 8 lakh? I call it net annual value. From this, guys, what are the two deductions? One is a 30% flat deduction. 30% of 8 lakh is 2 lakh 40. Can I minus that? Yes. And one is interest deduction. What if I paid interest of 1 lakh? Can I minus 1 lakh, guys? What if I paid 5 lakhs? Can I minus 5 lakh? What if I paid 55 lakhs? Guys, I can minus whatever interest I have paid or payable. Doesn't matter. How much ever interest, guys? Is there a limit? No limit, guys. Why no limit? Because whatever interest you are going to pay or you are paid is bank's income or your friend's income. So the government will tax him. So can I minus the interest? Let's say interest is also 2 lakh 40. Can I minus interest also? Yes, 2 lakh 40 you can minus, no problem. So 8 lakh minus 4 lakh 80 is basically 3 lakh 20. This is my income from house property. Guys, is this one of the rooms out of the 5 rooms? Please tell me, is this one of the rooms? Yes. And when do you get out of the room, guys? Only when you take your income and you minus your expenses, only then will you come out of the room. So how much do you see coming out of the room, guys? Out of the room, I see 3,20,000 coming out of that room. Guys, can it be a loss also? What if this was, the interest was 6 lakh 40? So then can it be a loss also, guys? Yes. 8 lakh minus 2 lakh 40 minus 6 lakh 40 is 80,000 of loss. So can it be a loss from house property also? Yes, it can be a loss also, depending, guys, on these figures, depending. Generally, guys, the loss is not because of municipal tax. The loss is not because of 30%. The loss is generally because of interest payments. You can have a loss from house property. All right. So guys, this is what is the first part of your chapter called income from house property. Do you have incomes? Yes. Do you have expenses? Yes. How many expenses? 3. How many of them are on payment basis, guys? Out of the expenses, how many of them are on payment basis? Only 1. The remaining, guys, do you have to show whether you've paid or not? No. As long as it's paid or payable, you can minus interest, and for the 30% you don't even have to show it's paid or payable. What if I don't spend even 1 rupee, still will I get 30%? Yes, 30% is absolutely ad hoc and absolutely available flat for everyone. Alright, so this, I'm just going to add sections now, guys. The first section, which says that income from house property, which will be tax, etc., is called section 22. This is called the charging section. This says that if you have income from house property, we will charge it to tax. Next is section 23, which tells you how to compute it. And what we just learned is how to compute LOP. So that is 23.1. The first thing that you do with the house property is let it out. So this section tells you how to compute it. Of course, there are more sections here, but next is section 24, which tells you the deductions. So there are two deductions in 24, guys. Did you have an ad hoc deduction? So that is 24A. And did you have a deduction for the interest on borrowed money? Yes, so that is 24B. B is for borrowed money. Guys, just one simple question. Can this money be borrowed from a bank? Obviously it can. Can this money also be borrowed from a friend or a relative or a father? Yes, guys. And will you get interest deduction? Yes, because whatever is your interest deduction, it will be someone else's income. So the government has no problem. All right. So this is 23.1. This is LOP. Now, guys, we have very little time. So in that time, we will do the next thing, which is India's favorite thing, guys. Please tell me, why do most Indians buy their house, guys? To stay in it. Yes, that's called self-occupied property. 23.2, that is called self-occupied property. Please tell me, when you stay in it, are you earning any rent from it, guys? Please tell me, when you stay in it, are you earning any rent from it? No, it's very stupid. Guys, if I'm only staying, how will I pay rent to myself? So hence, SOP actually should not be an income only. There is no income from house property like SOP. But guys, whenever you buy a house for self-occupation purpose, does the government get very happy because you bought a house? You help the real estate sector, steel, cement, labor, banks, etc. Yes, so the government says, listen, I will give you a benefit, and the benefit will be a loss. But guys, how can a loss be a benefit? Because guys, if there is a loss, let's say of 1 lakh rupees here, and if you have a profit of 3 lakh 20, then can that be set off? Yes, that can be set off. I'll just write that same answer again here. This is 3 lakh 20. This is your income from one house property, and the government says this SOP, in the house that you're staying in, we will give you a benefit of a loss. And how is a loss a benefit? If the loss is of 1 lakh rupees, the loss can be deducted from this 3 lakh 20. Yes, this 1 lakh loss can be deducted. So guys, will my income on paper reduce? Yes. So will my tax reduce? Yes. So that's a benefit. Yes, that is a benefit. In the exam, guys, SOP is absolutely important. Most of my clients in my CA firm take this SOP benefit. So what's this SOP benefit? Let's see, guys. Please tell me, in SOP, guys, what is the actual rent? 0. What is the expected rent? 0. Which is the higher of the two, guys? Very important question. Higher of the two is also 0. Is there any concept of unrealized rent here? No. Is there any vacancy loss? No, because you are staying. So what is my GAV, guys? My GAV is also a big 0. So are you offering anything to the government, guys? No, you're not offering anything to the government. So will they give you municipal tax reduction? No. Give and take, guys. So what is this? NAV is also 0. Will you get a 30% deduction? No, that is also 0. But guys, the interest deduction, guys, the government says I will give you interest deduction. Don't worry. So if you bought this SOP on a loan, can the loan be from a bank, friend, father, etc.? Yes, doesn't matter, guys. Friend's father also doesn't matter. You will get an interest deduction. So let's say the interest that you paid is 1 lakh rupees. Can you get a deduction of that 1 lakh? Yes. So this will be my loss from house property. Just 1 second, guys. My pen is hung up. Yes. So this will be the loss from house property, which is 1 lakh rupees. Only thing now, guys, this interest has a capping. Guys, please tell me, is SOP a benefit? Yes. And can the government of India afford to give unlimited benefit? No, guys. Even Jio, when they were giving you free data, was it unlimited free data? No, it was 1 GB a day or 2 GB a day. So same way here also, guys, the benefit is limited. What is the limit of this interest? They say this interest under section 24B, only in case of SOP there is a cap, or only in case of SOP there is a limit. So guys, does LOP have a limit? No. Does anything else have a limit? No. Only in case of SOP there is a capping. So how do you remember this? Remember a cap with written SOP. So only in case of self-occupied property there is a limit. What is the limit? The limit is 2 lakh rupees per person. So can I take 1 lakh? Yes. Can I take 2 lakhs? Of course, yes. But can I take 2 lakh 20? Sorry, 2 lakh 20 you will not get. You will only get maximum 2 lakh per person. And this 2 lakhs also, guys, you will get only if you fulfill 4 conditions. So there are 4 conditions you have to fulfill. Even if one of the condition is not fulfilled, you will only get 30,000 per person. So please tell me again, guys, in LOP, was there any limit? No limit. Why? Because you are offering something to the government, so the government gave you deductions, no limit in case of interest. But in case of SOP, is there any limit? Yes, there is a limit to the interest deduction. What is the limit? 2 lakh if 4 conditions are fulfilled. Excellent, Venkat. So there are four limits. There are limit for up to 2 lakh or 30,000 if 4 conditions are fulfilled. What are the 4 conditions? The 4 conditions, the shortcut is certify 5 accounts for 99. That's a shortcut, guys. Let me tell you what the shortcut is. Guys, this SOB property, if you've taken a loan, that loan should be taken on or after 1/4/2000, 1/4/1999. So the loan should be taken on or after 1/4/1999. That's the first condition. That means, guys, the loan should be fairly new. Of course, 1/4/1999 is also old now, but it should be fairly new. Next, the loan should only be for acquisition of a house property or construction of a house property. What other purpose could it be? It can be for reconstruction. It can be for renewal. It can be for repairs. For all of that, then I don't get any deduction. Yes, you do, but you get only 30,000 maximum. That's the maximum, guys. You can go anywhere up till it. You can be lower than that, but not above that. Next, if you are constructing a house, then the construction should get completed within 5 years. 5 years from which date? No date, guys. The year you start, that year you ignore. So let's say you started the construction in 1718, that year you ignore. After that 5 years, that is 1819, 1920, 2021, 2122 and 2223. In this time period, it should be complete. If it's not completed, then you're slow, and then your deduction will also be slow. That is only 30,000. And you have to get a certificate from a CA, you have to get a certificate from the bank as to this is the interest that you are paying or payable. So these are 4 conditions, and if you fulfill all 4, then 2 lakhs maximum. If you don't fulfill even one, then it drops to 30,000 maximum. Maximum why, guys? Because can it be 1 lakh 80? Yes, but it cannot be 2 lakh 80. So 1 lakh 80 or 2 lakh is the maximum. All right, so this is an SOP, guys. Just let's finish this SOP and then end this session, so that the next session we can take it up from here, guys. This SOP benefit is now available for 2 houses. So can I have one self-occupied property in Mumbai, where I stay whenever I'm in Mumbai, and can I have one self-occupied property in Bangalore? Yes. Can there be nil values in both? Yes, guys, everything will be nil because me or my family are staying in these house properties. And guys, can I take both of them on loan, and can I pay interest on both? Yes. So here, if I'm paying interest of 1 lakh, can I minus that? Yes, paid or payable. And here, if I'm paying interest of 1 lakh 20, can I minus that? Yes, but both of them together, what is the limit, guys? It is 2 lakh 20, but this is not allowed because you have only 2 lakh per person. It's not per house, it's per person. I'm the same person. How do you remember this? Because there's a cap of 2 lakh. The cap is per person. ऊपर कप है सौरभ. The cap is per person, so this is a per person cap. The per person cap is 2 lakhs. So this is the concept. Just 1 second. Thank you. All right. So this is the concept of SOP. I can have two SOPs, and guys, here we go. One small concept again. Guys, what if I can't stay in that house property? Because let's say I bought one house property in Mumbai, and now let's say I'm moving to Bangalore. Can I stay in that house property in Mumbai? No. But still, will it be considered a house property? Yes. Because no one's staying in it. Still, yes. What if I'm family staying it? No problem. Me or my family, anyone can stay SOP. Even if no one stays, it's still SOP. As long as I don't rent it out. Because the moment I rent out, what does it become, guys? It changes character to become LOP. Guys, if you have in the exam two calculations, one is SOP, one is LOP, which one do you think is the easier one, guys? SOP is so much easier because SOP, everything is nil, 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 nil. Only one deduction, which one, guys? Interest deduction. Only interest deduction, which is of course maximum up to 2 lakhs or maximum up to 30,000. Whereas in LOP, will you have to calculate AR, ER, will you have to calculate GAV, will you have to minus the three deductions? Yes, and will finally you have to calculate your income from house property. So in the exam, if you have to do both, then first do SOP and then do LOP. Always put your best foot forward and the more right foot forward. So this is the concept till now. Guys, this is SOP, this is LOP. Since we have the time, I'm going to use this time for one more concept. Guys, can it happen then in this year, for some part of the year, guys, for some part of the year, I was letting it out. And then for some part of the year, I was staying in it in myself. Yes. So this is a concept of LOP plus SOP. And this, how do we solve this? Is this some different formula, rocket science? No, guys. LOP plus SOP is the same calculation as LOP. So in this, will there be actual rent? Yes. Let's say you've given it on rent for 9 months for 1 lakh rupees a month. So that is 9 lakh. On the remaining 3 months, you stayed in it. Of course, you didn't pay any rent. So that was 0. So total is 9 lakh your AR. Will I compare it with my ER? Yes, the ER again is for 12 months. Yes, always guys, this is also for 12 months. The 3 months is 0, but it's calculated for 12 months. Your ER for 12 months is, let's say, 10 lakh. Now guys, you all will give me answers. Please tell me, from this actual rent, can I minus any vacancy? Sorry, can I minus any unrealized rent? Yes guys, unrealized rent I can always minus. There is no comparison for unrealized rent. All of you all are going wrong, guys. I don't like this. So please, I will ask this question again. Can I minus any unrealized rent from this, guys? Guys, please tell me, is there a comparison for unrealized rent or is there a comparison for vacancy loss? There is only a comparison for vacancy loss, guys. So can I minus unrealized rent? Yes. Let's say the unrealized rent was 30,000. Can I minus that? Yes, I can minus that. What is the amount now? 8 lakh 70. Now please tell me, guys, if there is a vacancy loss, that means somewhere here there was 1 month which was vacant. Can I minus 1 lakh of vacancy loss? Excellent, Kavya. Good, Venkat. Anyone else, guys? Can I minus vacancy loss? No. Good, Rinat. Good, Arjun. I can't minus vacancy loss. Why? Because guys, AR is not more than ER. So vacancy loss, sorry, I cannot minus. What about ER, guys? Can I minus unrealized rent from here? Sorry. Vacancy loss, sorry, nothing will bother. So either 8 lakh 70 or 10 lakh. Please tell me what will be my GAV? My GAV will be 10 lakhs. Always, guys, whichever is higher. So then again, can I minus municipal tax here, guys, in LOP plus SOP? Yes, because it's the same calculation as LOP. So please tell me, can I minus municipal tax? Yes, when paid. From NAV, can I minus 30% reduction? Yes. Can I minus interest? Yes. But guys, will there be any limit on the interest? No guys, limit is only in case of SOP. The cap is only for SOP. Alright. Another shortcut I will give you guys, whenever you are offering something to the government, they will give you full deductions, no capping. Alright, so let's quickly see what all we've done in house property. Guys, have we seen LOP? Yes. Have we seen SOP? Yes. And have we seen LOP plus SOP, which is nothing but LOP? Yes, we've seen this. This is 23. We'll move ahead when we come back from the break, and we'll also look at the QuickBook questions and very important chapter. Guys, in this first session, we've completed introduction very comfortably. I've also introduced myself and the way we are going to tackle this very properly. Then we finished a chapter called agriculture income. With that, we also did composite income. With that, we also did scope of partial integration. With that, we also did some rates of tax. And we also started income from house property. Action packed session. The next one is going to get even better. Any questions? Let me know. Else, guys, see you in half an hour now at 6 o'clock for the next one. Thank you.